And welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics and podcasts such as this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Friday, April 28th, and joining me as always, my dear friend, Dr. Orphe Divounguy, the PhD economist. Dr. O, earlier this year, the Federal Housing Finance Agency announced two major government-sponsored entities, the Federal National Mortgage Association, Fannie Mae, and the Federal Home Loan Mortgage Association, Freddie Mac, will be adjusting their single-family pricing framework beginning on May 1st. And there are fee changes that are occurring inside of the loans that are being offered here that are going to affect future mortgage rates. And the way that these fees are being administered, I think, is not sitting super well with people. When you look at the fees and the way that the fees are being, applied to borrowers, that people with bad credit, people with good credit are both paying more than they were prior to May 1st, or will be paying more prior to May 1st. But the adjustment that's given to people with a higher credit score is actually higher. They're paying more in fees on a percentage basis than the people who have lower credit scores will be paying. That's somewhat confusing the market. First of all, do I have those facts straight? Because this has been a story that, frankly, I think in the media has gone straight to commentary. Right. And has been, like the reporting on this has been behind. There've been a handful of outlets that have written about this. But this is one of those stories that seem to be seized upon by both the left and the right, in particular cable news. But so far, am I on the right track with regard to facts?
I think that's exactly the problem, right? Is that every issue has become politicized in this country. So how about we just explain to our listeners?
Yeah, break it down for me and so help me to understand. But here's what I understand from what has been reported, and I believe this is factual. So with the new fees, a home buyer with a credit score of 680 or above will now pay a 1% LLPA fee. Those who make a 15 to 20% down payment will be seeing the biggest increase. That was documented actually in the USA Today's reporting, and it's about $40 a month on their mortgage.
I think the reporting on this needs to be debunked.
Okay, let me throw the other side of this out, because people who have a credit score below 680, and again, this is from USA Today, these are the riskier borrowers. If you have a credit score below 680, people are more likely to default. They will receive a 1.75% discounted fee, LLPA. For the people that are out there that are trying to make sense of this, and forgive me for interrupting, I just wanted to kind of lay those two pieces out there, because I think that that's kind of the nexus of this discussion, right?
For sure, there's a whole grid. And the bottom line is the LLPA, or loan level price adjustments, are essentially a way Fannie and Freddie are insuring the taxpayer against borrowers defaulting on their loans. And so it should cost more to insure low credit borrowers than high credit ones.
Is that happening in this?
Absolutely it is. If you have a credit score, and by the way, it's based on your credit score and your loan to value ratio. In other words, how much you're putting down, right? And how much you're borrowing. If you have a credit score of a 680 to 699, I'll give you a very good example, and you're financing 80% of your home, putting down 20%, you're paying a 1.75% fee, 1.75% of your home value, of your loan value in fees, which works out to about $4,900. Now, someone who's financing the same amount, 80% of their home value, with a lower credit score at 640 to 659, so roughly 40 points lower, is paying a fee of 2.25% or $7,000. The fees are still much lower for people with higher credit scores than for people with lower credit scores. That's the bottom line. Now, what's happening with the recent changes, they try to lower the spread between the two groups. In other words, the penalty for having a lower credit score used to be much higher than it is today. And all they've done is reduce the penalty for having a lower credit score. And the reason they've done that is because Fannie and Freddie are really, really in good shape when compared to where they were after the global financial crisis.
Have they reduced their exposure, or have they simply shifted this expense onto the higher rated credit score?
They haven't. The only people to see an increase are going to be, I've done the math. So there's the few groups, there are going to be a couple of groups that are going to see an increase. And the groups that are going to see an increase are groups that are likely out there trying to purchase a second home or borrowing a ton with high credit scores, right? So you have a group at the top that's getting a huge discount relative to other groups. And that group will see a small increase in cost if they do not put down a large enough down payment. In other words, the people that are going to put 5% to 10% down, but have credit score or high income and have credit scores above 730, those people will see a small increase. And I did the math. You see an increase of maybe $800 in their closing cost, or that could be rolled into the loan. And that's because the fee they were paying was 0.375%. 0.375% compared to somebody with a 640 credit score paying 2.25% or above, right? And so again, higher credit people with the bottom line is people with a top credit will still pay less than someone with a lower credit score. And even with the current changes, that remains true. Someone with a 780 credit score or higher will face a 0.375% fee, which is peanuts compared to other groups on the grid, including, people with lower credit scores will pay way more in their closing costs and throughout the life of the loan. There will continue to be higher risk borrowers, which is why I think for most people looking to buy a home today, getting their credit in order, this does not change anything. Getting your credit in order should be your top priority. Having a top credit score will result in you paying lower fees, having a lower mortgage rate, and having lower monthly payments, lower closing costs, and lower monthly costs for that loan.
So, with regard to just loan level pricing adjustments and this conversation, I appreciate the thoughts on this. I think it's important, that we get into sort of the nuts and bolts of this. Let's just, not forget, it's only 15 years ago that Fannie and Freddie needed $188 billion to get itself out of the financial crisis that had been created. And that was in the wake of odd loans, bad vehicles, things that you and I have talked about in the past. Ultimately who paid for that? We did. Right. So, that's why we have these conversations.
Of course. Which is why we have those fees, right? Those fees are extremely important. And because of those fees and because of the tight credit standards that we've adopted in this country, because borrowers have much higher credit. By the way, the median credit score today in Q4 of 2022 was 711. We're much higher than it's ever been.
The United States still a great place to buy a home. The pathway to home ownership here is far better than so many places. I think that the concern here that we're hearing is that the people that have better credit scores are being asked to pay more. You're presenting this in such a way that it's, yes, that's true, but the lower credit score people are being asked to pay more too.
What I'm saying is basically the fee is still much lower it's not just still. It's like 5 times lower if you have a high credit score. So the incentives haven't been distorted. The bottom line is you need a high credit score because a high credit score is a lower risk borrower. And being a low-risk borrower is highly rewarding.
I appreciate you helping us to get to the bottom of that. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and other quality podcasts at americastalking.com.